The accounting equation can be helpful in assessing enterprises' financial health situation. Let's take an example. At the beginning of the period, the accounting equation is such: assets are 100, liabilities are 50, and owner's equity is 50. Using the basic accounting equation, the scenario 1 at the end of the year, assets are equal 80 and liabilities are 50, owner's equity is 30. The scenario 2 is assets equal 120, liabilities are 70 and owner's equity are 50. So looking at the scenario 1 and 2 and then comparing with the beginning year scenario, it looks that assets are more in scenario 2 and the liabilities are also more in scenario 2 and owner's equity looks more in scenario 2. But when it comes to measuring financial health, we have to look at how much wealth is assigned to owners. And the wealth assigned to owners in scenario 1 is 30, and in scenario 2 it is 50. And comparing that with the beginning year period, the wealth situation in scenario 1 has decreased for the owners, and in scenario 2 it has not changed from the beginning. If we now expand the accounting equation, replacing owner's equity with capital, revenue, less expenses, less drawings and less dividends, and compare the beginning period scenario with scenario 1 and scenario 2, the capital and revenue and expenses and drawings and dividends as the owner's equity can be different in scenario 1 and scenario 2. It can be sometimes distracting to look at the revenue and the expenses and the drawings and the dividends and trying to ascertain the big picture, because they can sidetrack the focus. The focus here is how much should be the owner's equity. So in scenario 1, the owner's equity is 30. When everything is collapsed, the capital, revenue, expenses, drawing and dividends, once it's collapsed, owner's equity is 30. And in scenario 2, it is equal to 50 when the capital, revenue, expenses, drawing and dividends are collapsed. Although revenue, expenses, drawings and dividends can differ in scenario 1 and 2, they are not the main focus. The focus is how much is the owner's equity, how much should be attributed to owners as well. So this resonates with our previous basic accounting equation analysis. Scenario 1 shows that the owner's equity is 30, and scenario 2 shows that the owner's equity is 50. So scenario 1 are still the same, owner's equity has decreased, and scenario 2 is such that owner's equity is still equal to the previous situation. So then the question is, how come that then the assets have increased? In scenario 2, the assets have increased, but with increase in asset, there is also a corresponding increase in liabilities. So when we look at the net asset situation, assets less liabilities, it is 50 in scenario 2. And in scenario 1, assets less liabilities are equal to 50. So the net asset situation or the owner's equity has not differed in terms of the value. What has differed is that the scenario 2, the assets or what enterprise own has increased in value, but at the same time there is a corresponding increase in the liabilities. What enterprise should pay to others also has increased, and shows that the enterprise value for the owners are the same. This brings us to the end of the video. Thanks for watching. I am Professor Indra Biseka.